sometimes SMEs. And India has lots of post office, and that is another way to utilize it rather than putting gold, your money, into the pocket. Third one is, in order to finance infrastructure, long-term financing is required. Infrastructure takes 10, 20 years. Deposits are usually 2 to 5 years maturity. Then long-term financing is very important. And one is insurance, life insurance. That's a very long-term savings. And then pension funds, 30, 40 years. So those two financial instruments has to be well developed in many Asian countries. Last one is overseas investors' money. However, too much reliance on overseas investor money will create future burden of their next generation. So I think the domestic savings is very important in order to create very stable budget conditions and also financial sectors. And infrastructure investment, everyone said infrastructure investment is very good. This is a Japanese case. Left-hand side is Northern Ireland, and right-hand side is Southern Ireland. There are big difference among infrastructure, economic effect of infrastructures. The highest part is coming from large cities. And rural region has much lower impact on economic infrastructure. The reason is whether the region has invited private sector activities after the completion of infrastructure. So large city, once the good infrastructure is completed, many companies come there. And then also the employment will be created. So the infrastructure investment itself is not important, but most important thing is indirect effect, and where the private company, private sectors will be induced into the region. And horizontal axis measures private capital divided by government capital. If it goes to the right, then productivity of infrastructure goes up. So infrastructure investment, quite important, but it has to bring private activities, not only manufacturing, but also improvement of agricultural sectors. This is a case of Thailand, economic impact of infrastructure. Especially 1970s and 80s, infrastructure had very big positive impact on agricultural sectors because roads and ports has created a shipment of agricultural farmers to domestic cities and also to overseas. And lastly, I would like to talk about micro studies of infrastructure investment. This is a case of a Philippines highway. It is called the Star Highway of the Philippines. And we are looking at the difference in difference method analysis and looked at the tax revenues of each cities and villages along these roads. And it is very interesting to look at those tax revenues, corporate tax, income tax, and so on. Then it turns out business tax had been increased significantly. However, income tax were not so much affected. So that means this highway has created a big job and also big private industries along this road. However, the profits are not well distributed to individuals. So that was this infrastructure. So looking at the tax revenues or GDPs in the region will create the economic performance, and also we can learn about the economic performance of infrastructure investment. And this is Uzbekistan's railway case. This is very different from roads. Uzbekistan's railway case, two terminal stations have been benefited most, and not so much in between. So railway in Uzbekistan's case has a big positive impact on terminal stations, in two terminal stations, but it was not so much effective in between those lines. And this is a case of China, Shanghai, Tibet railway case. This case, so far, as you can see here, there is no private industry along these railways. and the economic impact was very small. So because that railway itself has been constructed, but private activities, private industries were not located yet in the region. And this is a Japanese bullet train in Southern Island. Many people will criticize it's a waste of money. But it turns out when this railway was connected with large cities, then the connectivity is another important thing to bring private business into the region. And furthermore, it takes about 6 or 7 years, positive economic impact has been revealed. So infrastructure has some time lags to be completed. And private-public partnership are often talked in order to make infrastructure investment efficient. But at the same time, the bonus of operating companies has to be increased if the infrastructure investment are performing very well. So private investors will gain by good performance, but at the same time, railway company or road highway companies, their employees should have received bonus if their economic performance are very good. That will create a good incentive mechanism in order to improve services for those infrastructures. Lastly, I would like to talk about the hometown investment trust funds. Infrastructure can be provided by large investors, pension funds, insurance. And there is another way to finance infrastructure in the region. And we call it the hometown investment trust funds in Japan. Investment trust funds is not deposit from banks. It is individuals' investment money targeting to some specific project. One is wind power. Left-hand side is solar power. And this left-hand side on the bottom is small shops along the railway line. When the railway has been completed in Japan, many small businesses want to have their restaurants. These are noodle shops and sushi restaurants. But banks could not lend money because it's a new startup businesses. They didn't have any businesses with the bank. So they could not borrow money from banks. Then many people in the local community put their money between $100 to $300. And about 186 people put their money into these small businesses. Then along the new railway line, they could set up their own business into the region. And solar power is another example. Banks were very much reluctant to lend money to those risky power sectors. And community people invested. About 386 people put their money into these solar power and wind power panels. And that became very successful right now. So I think infrastructure investment is important, not only for large infrastructure, but bringing the community money into small infrastructures, and the SMEs will create a much better opportunity for their investment. Thank you very much. That's all my presentation.
Thank you, Dr. Yoshino. Thank you, Dr. Yoshino. We are running out of time, so we'll quickly try and end this because we have a next session of the Troika. I think we may not have a Troika, we just have two High Commissioners, 2 ambassadors. But before we go into the next session and before we go into the coffee break, if there are any pressing questions, there's been remarkable consistency on this panel about the need for infrastructure investment and the ways to finance infrastructure investment and how infrastructure investment should crowd in private investment to really make it effective. So any questions, please identify yourselves quickly and be brief if there are. Any questions? Yes, please. So there are 3 hands up. So I'll take 3 questions and then we'll stop here. Yes, please go ahead.
I'm C.R. Prasad. I don't call it a question to Mr. Das. You mentioned about the US Fed going to take a decision on 17. And suppose if they increase the interest rate there, whether India has taken the steps to take care of its possible negative effects on our economy, on our own market. Thank you.
We'll take the next question. So we'll collect 3 questions and then I'll give it to the panelists. Yes, please. Dr. Wan.
Okay, Guang Huangwan from the Asian Development Institute. My question goes to Mr. Das. We are excited, I think many of us, to get to know the news. India will surpass China in terms of growth rate this year. But for India to really catch up with China, you got to really expand the growth differential from about probably up to 1% this year, 0.8 or 1%, to probably 2 to 3%, and you got to maintain that kind of gap for about 30 years or so. Now, of course, I think many people are optimistic. There are also many who are a little concerned whether that might happen. So I'd like to have your views, and one of that, of course, is infrastructure and also government bureaucracy. And you mentioned both of the points, but I want to elaborate a little on this big picture. Thank you.
Yeah, thank you. My name is Mahesh Khera and I represent Broadband India Forum. Question for Mr. Yoshino. How do you actually go about collecting or putting investments in infrastructure and projects which are aimed to deliver government to citizen services in Japan? The question is relevant to us because we are on a path of $100 billion Digital India program, and that is predominantly centric to deliver G2C services. So your views on that?
Thank you. May I request Mr. Das to first answer the questions directed at him?
Thank you. There are 2 points which were made. One was about the US Fed decision. Now this has been under discussion. The US policy stance is something which has been expected over the last 2 years or so. And we are aware that it has to come at some time. It's not something which is suddenly confronting us. This has been talked about. Probably the decision US has been deferring because of their job figures, the employment numbers. Today, there is an emerging view that the job numbers in US look better. How much increase they would do, we do not know. But I can assure you that we as a country, the government, the finance ministry and the central bank, that is the Reserve Bank of India, we are prepared for all eventualities. And as and when the situation emerges, I am quite confident that we will be able to deal with the situation. And with regard to the other point which was mentioned about the growth prospects, now we are not we are looking about our growth. We are not in competition with any other country. And today, India is also emerging as a major contributor to the world growth revival. Whatever projections the IMF is making about the world growth going up marginally, a large portion of it, I think, is accounted for, about 18% or so, I am told, is accounted for by the growth expectations around India. Now, last year, 7.3, 7.2, and this year we are targeting about 7.5 to 8% growth. Now, what will be the year-end figure, I cannot say, but we are quite confident at this point of time that 7.5, upwards of 7.5 is something which we can reasonably expect. The monsoon has been little, it started well, then it slightly came down, and monsoon is not yet over. So there have been some concerns around the agriculture sector. But I think the rural demand, there is a slight, visibility. There is some visibility of a pickup in the rural demand. If you remember, even in 2008-9, at the peak of the financial crisis, the global financial crisis, the rural demands in India remained quite robust. And then the government of that time, went on a expansionary policy, and the rural demands were sustained because of various budgetary injection of funds through budget, etc. Today, The scope for such expansionary policies are limited. In fact, it will again fuel inflation, it will add to fiscal deficit. But having said that, the numbers, the amounts which are provided in the budget are sufficient to sort of push the expenditures on the investment sector, to provide employment if should there be a problem arising out of agricultural wages. And a number of measures are being taken to see that the expenditures on the infrastructure sector is maintained. I did mention about the effort of the government to see that the railways and the roads, the shipping and other capital kind of expenditures do take place. I'll give you one example. For example, I think some 4 months ago, 3-4 months ago, government has, not 4 months, about sometime in May, the government has taken a decision with regard to the PPP projects, let's say road sector PPP projects, which have, which sort of, put in very ambitious bids when the growth was probably doing, the expectations of growth were 8-9% like that. Then because of subsequent problems, there are a large number of stalled projects. So sometime in May, the cabinet has cleared a policy of providing bridge finance to stalled PPP road sector projects, BOT sector projects. Now that has been approved. In other words, there will be a bridge finance which will be given to these project developers at a certain interest rate with a slight markup over the government's own borrowing rate, which emanates from the borrowing of the government securities. So a number of initiatives are being taken, and given the kind of spend around the infrastructure sector we are expecting, given the number of the FDI figures I mentioned, and please also remember that there are global measures, whether it is GE, whether it is Siemens, or whether it is Foxconn. There are a large number of global players who are today looking at investing in India. This whole idea of Make in India and the manufacturing emphasis on manufacturing, which is being given by the government, we do strengthen our expectation that the growth numbers will be maintained. The IIP figures of July were released last Friday. They show improvement, especially in the capital goods sector and in the manufacturing sector. So with a host of these factors, we, overall reasons, overall scenario, if I can present, I don't want to go into further details. We are quite reasonably confident, or rather confident, that it will be, the growth rate would be 7.5% plus. And we are not just looking at growth, we are looking at giving a boost to manufacturing, create more jobs. We are giving a great, thanks to the arising out of the Honourable, arising out of the Prime Minister's announcement on 15th August about startup companies. We are working on, the government is working on a policy framework to give a boost to new startup companies, and it is expected that many of these startup companies would be able to create considerable amount of employment around them. So I'll stop here. Thank you.
Thank you, Mr. Das. Dr. Yoshino?
Thank you for a very important question. Too much reliance on tax revenue will not be good for infrastructure investment, because that will create huge budget deficits. So India and many Asian other countries require some other means to provide money to infrastructure. And in order to do so, savings rate has to be increased. And savings not only allocated to deposits, but also insurance and pension funds. And insurance and pension funds are long-term savings. And they should look for the long-term investment. Then infrastructure investment will become a very good target for their investment. And in Japanese case, in 1970s, household savings rates were more than 24%. And those money in Japan originally put into the post office. And that money was collected to Ministry of Finance, and Ministry of Finance spend their money to infrastructure and other ways. But recently, I think rather than putting their money to Ministry of Finance, I think PPP, private-public partnership, will be very important. And the government can issue infrastructure bond so that that can be sold to long-term investors, such as insurance and pension funds. So one way is, one by one, the infrastructure bond can be issued. Another way is the consolidated infrastructure bonds. So several 10 or 20 infrastructure are gathered together and then issue infrastructure bond, and that can be purchased by private investors.